Welcome to another episode of Build with Bitcoin. We're co-hosts Israel Munoz and Lynn Bairstow, and today we're doing a big picture episode based on 70 plus conversations we've had with both a combination of investors and startups to date. And today we'd like to focus on some common themes that Lynn and I have identified in this first year. So we have pulled together a compilation of the different conversations with 6 prominent Bitcoin venture capital fund partners. So we'll be getting right into it.
Yes. And I think it's important to note that, each of the conversations on its own is really interesting and enlightening. But as you and I started pulling these together, we noticed that so many of the themes that our Bitcoin focused VCs were mentioning were commonalities. And so we thought it'd be helpful to kind of pull some of these together and take a look at what we've identifying and what we're seeing as a continuing trend of how venture capital is really changing under a Bitcoin standard. So yeah, the first theme that we identified was, and again, these are our VCs that are Bitcoin only focused. So they have made the decision that they wanted to spend their time and energy investing in companies that were building the infrastructure for Bitcoin to increase its use and adoption. That's a very niche field. And, along with the challenges of raising capital, they really are feeling now that they're a little bit into it, that having a Bitcoin only focus is a strategic advantage. Multiple fund partners emphasize their exclusive focus on Bitcoin over broader crypto, certainly viewing this as a competitive advantage rather than a limitation. And it's not just a preference, it's a fundamental strategy based on the technical and philosophical differences.
Suffice to say, Bitcoin is a neutral monetary protocol that cannot be manipulated or controlled by third parties. And that dramatically expands the addressable market, because now institutions and even nation states, as well as individuals, can opt into that neutral monetary protocol, have confidence that a third party can't interfere with the operations of that business, nation state, or individual. And that's why it's so important, the fact that it's neutral. Ethereum just replaces the central bankers with the nerds. It's no different. You're just swapping out one elite for another, whereas in Bitcoin, there is no elite. And that gets to your point around these protocols being mutable, while fiat is mutable. The monetary protocol can change and they can create new units. They do that in crypto. They do that in fiat. Bitcoin sort of solved all those issues, which is why it's much more interesting and exciting. And the other point I'd make, which gets into the weeds of investing in early stage companies a little bit, but I think is really important and is not made clear by venture capitalists at all, because there's an incentive distortion issue with crypto versus Bitcoin. But it's the idea of the tokens. Mm-hmm. So when you invest in early stage companies, and when we would build early stage companies and invest in them now through Concentric, what we're always looking for is some evidence of product market fit. And product market fit means that the market values your product. And the most obvious way to tell that is, well, are they paying for it? Are people paying for it? Do they pay more for it over time as you launch more features? Do they tell their friends about it? Do they stay with the product over a reasonable amount of time? What are the usage stats? All those sorts of things. So when you decide to invest money in an early stage company, you want to know that there's product market fit, because that's your signal that the product's ready to scale. So that if you pour sales and marketing dollars into the business, you're not just throwing them into a black hole, right? Mm-hmm. Now, crypto completely obscures that signal from the market, which is already hard to discern through the launch of tokens. So what they do is that they launch a product, then they'll say to the community, well, if you use this product, we'll give you this token. So they've completely broken the feedback process between the product and the market, because you don't know if your users are using the product to get the token, which they can then dump on some unsuspecting people later on, or because they actually like the thing in the first place. And that's why, in part, I think a lot of these crypto protocols end up going nowhere, is because they have no idea if they're building a useful product or not, because a feedback loop between the market and the management team is gone.
I prefer thinking about it as, what are the benefits of this rather than what are the flaws of everything else, I suppose, which is that you don't need permissionless. That's actually a better way of putting it. I think that essentially means the same thing as censorship resistant. And that's also it's guaranteed by the technical properties. It's not in and of itself ethical, but it's easy to see why you might have a positive ethical reading of that. So with those two established, no other crypto comes even remotely close, even with the best of intentions. We basically see Bitcoin as being such a fundamental technology or fundamentally important technology that eventually it will be part of almost every business. Anything that is useful in crypto will probably end up on Bitcoin. And I'm not sure at the time we really had any good examples of that, but I do feel like it's basically, I wouldn't say it's coming true exactly, but the signs are there that it probably will come true. I'm a lot more confident about that now than when we wrote it. I can go through a handful of examples.
All of those other ones are going to zero. And this is not, it might take some time, but they are all going to zero. So if your trade on Bitcoin is to make more money, so I understand why people do this, because they're either getting punished in an existing fiat system, and they're trying to make more money quickly, and they're gambling because they're not deep enough on this.
The second theme that we'll be exploring is the extremely early stage of the ecosystem's development, despite what we may think with recent price action. So Bitcoin has had a 15-year history of significant price appreciation. However, as you'll note in the following clips, all of these investors consistently emphasize how early the ecosystem remains from a business development perspective and their lens as an investor in early stage companies.
We probably have one of the most unique lenses into industry activity than anyone, because we're backing 36 companies. So we see the data on the number of users each company has. And I think it would actually surprise people that it's probably not quite as large as people expect. And so, what does that tell me? That tells me we're still really early. But that also gives me a lot of optimism that there is going to be a much larger impact and very explosive growth that's going to come out of these cohort of companies.
It's 1995 and it's AOL and dial-up modems are the winners right now. And the newspaper companies like the New York Times are making money on this thing called the internet, selling advertisements. And you haven't really heard of Amazon.com quite yet, or it's kind of emerging, I guess, at that point as a book distributor. And you haven't really heard of Google yet. I'll never forget starting business school, and I'm like using Yahoo as a search engine, and the librarian says to me, you should look at this thing called Google.
Over the last 2 years, I think the ecosystem has moved forward in an exponential fashion, but we're still extraordinarily early. So the maturity of the tech stack has come on leaps and bounds, even over that 2-year period. There are multiple implementations of Lightning wallets. You can have non-custodial as well as custodial Lightning. Lightning works pretty well. The payment success rate is, in the high 90s. But there are very few places that accept Lightning unless they're already Bitcoin maxis, basically.
Investing, roughly in like 10, 12, like a dozen portfolio companies a year. So we've accumulated a portfolio of way over 50 companies over this 6 plus almost 7 years. And we've as companies in our portfolio grow, we gradually started to pay more attention to like follow-on and growth stage financing. So having started as like super early stage, and we're still committed to supporting the founders from like the very early stage, basically also first-time founders, technology entrepreneurs. That's kind of like where Fugger's strength comes at its best to support the Bitcoin ecosystem.
The third theme we identified was low time preference and long-term partnership approach. For our Bitcoin-focused venture capital, Bitcoin investing represents a fundamental shift toward longer-term thinking and deeper founder relationships, contrasting sharply with the traditional VC short-term focus.
Everything that we've done and how we've designed, 1031, every little detail, what we named it, what our approach is, how we try to go about our business is about alignment with Bitcoin. You know, what I said before, you know, a different time when we were at the Bitcoin takeover was that, you know, we didn't name ourselves Andreessen Horowitz. Like it wasn't about any of us individually. That's usually what you see with most investment firms is they name it after themselves. Everything that we've done has been, okay, well, how do we align with Bitcoin? How can we help push Bitcoin forward? Because we generally believe if we do that, then, you know, goodwill will accrue to us, good performance, good outcomes.
Trying to think through what it would look like in a venture fund that had the exact opposite dynamic. How every single node in this network made every other node in this network stronger. And how would you treat entrepreneurs if you knew it was going to be a lot longer path? And they would, some of the first technology that they might build that would have a lot of value would then go to zero in value in Bitcoin terms. They would have to build more value for customers. And so that would have to take an entirely different approach in thinking about the entrepreneur. You would have to care about them deeply because you would be setting up a long-term partnership to try to help them. So you had to, so in every facet of the venture capital company and what that looks like needs to be re-engineered to be able to support that. So you can't block people out by fiat money instruments. You can't put in this system. You have to be a good actor. And on a sector, and it's hard to create monopolies in this because you constantly under threat of providing more value.
Another common theme is Bitcoin as an opportunity cost changes the investment calculus completely. So the appreciation of Bitcoin fundamentally changes how these investors think about capital allocation and company building. And this is creating a completely new framework for measuring success.
Bitcoin is the opportunity cost. I mean, at the margin, the more you understand it, the more you realize that it's the opportunity cost. It's the opportunity cost for individuals. It's, well, do I want to make this purchase or do I want to get a little bit more Bitcoin? And the same line of thinking ultimately applies to companies who are building in the space. It comes to investors who are looking to perhaps consider investing in a fund versus should they just buy some more Bitcoin? I think Bitcoin will ultimately shift the thinking in a very significant way of all of these groups. I've written about it. I wrote about it even a couple of years ago when I started really thinking about and talking about this concept of Sats flows, which is sort of like the catchy thing that's sort of like the analog to cash flows.
If you assume that the Bitcoin IRR for the last 14 years, 15 years has been 45% IRR, and you know that it's repricing the existing system instead of the other way around, instead of if you invert the unit and you say Bitcoin's repricing the world, my house is falling in Bitcoin terms, energy prices are falling in Bitcoin terms, all prices are falling in Bitcoin terms, essentially matching my thesis, rather than it's going up against fiat dollars being debased, then you realize Bitcoin's IRR for the next 15 years is going to also be 45%, as long as it's decentralized and secure. So how could you beat that IRR? You just should hold Bitcoin. The only way to beat that IRR is by investing in Bitcoin companies that then they're building profitability in Bitcoin terms.
The fifth topic that we identified is infrastructure building and network effects. So the focus of these investors is on building the fundamental infrastructure that benefits the entire Bitcoin network, creating unique synergies between their portfolio companies.
This is a platform that has the most economic potential because it's neutral, which means everybody can use it and has an incentive to use it. Everything else doesn't. And you can see that in two ways from the market. One, there's a reason El Salvador adopted Bitcoin standard, not the Ethereum standard.
Mm-hmm.
And so to my estimation, it's because it's neutral. And two, if you look at the Bitcoin market cap and then add up the market cap of the next 20 or 30 coins combined, probably 50, and they're all heavily manipulated, you'll still get less than the market cap of Bitcoin. And Bitcoin has no foundation, no CEO, no marketing department.
In terms of the product market fit of like an engineering technology and the problem that it can solve. And the problem is facilitation of faster and cheaper payments. I mean, it's like if you think of like Jeff Bezos saying that how he built Amazon. So he built Amazon because fundamentally consumers want faster delivery and cheaper products. And that was like the core product offering of Amazon. So you just like get what you want faster and cheaper. And if you apply the same to payments, it's like completely universal and global. Like payments drive value across the world in all the sectors of economy.
It's open, it's interoperable. It's basically like, a lot of people in the venture world talk about investing in marketplace businesses. That's sort of like a big common theme that people got really excited about over the last 10, 20 years. And I think people aren't yet keyed into, like, we're sort of investing in a marketplace industry where there's serious network effects that can come to the early leaders across all different kinds of categories, and that the companies in this industry, whether or not they are in similar or different sub verticals of the Bitcoin industry compared to others, they can actually benefit and contribute to each other's success in a way that I don't think I have struggled to come up with any example that outside of Bitcoin that is similar.
The sixth theme that we are highlighting in this series is institutional adoption and financialization. There has been a wave of financialization coming into the Bitcoin industry, and all of these funds acknowledge the significant shift towards institutional adoption while maintaining focus on the infrastructure building rather than just following the money.
A sea change this year with the ETFs being approved. What the ETFs are so important is that these ETFs that are approved are no longer futures, betting based, just cash settled. These ETFs actually own the underlying Bitcoin. And so we're seeing institutions that are getting more and more interested in Bitcoin, and they're buying it. They're putting it on their balance sheets. They're putting it in their portfolios. And so, and that to David and me is wonderful, because it opens this reality that as more investors understand this, and as they allocate it to it as a separate allocation, because they understand that it has been highly correlated to the NASDAQ in times of stress. It's a risk on asset. It has been, but as it matures and that correlation breaks and it becomes uncorrelated to everything else in the market, including gold, then it becomes a separate asset class. And we're still early. We're so early. But as that happens, investors are looking for, okay, well, how do I take advantage of that next move?
And as we learned more, and as Bitcoin became more and more recognized as an asset class and entered the institutional investor space, especially some acceleration following ETF launches. And now there's even more acceleration with Bitcoin as a treasury being considered by private companies, public companies, governments. Even the US government is thinking about something like that. So we started to think more and more of Bitcoin as an asset class, and what kind of platforms and technologies can enable not only payments, but also institutional settlement, and also creation of instruments and platforms and solutions that would unlock value in Bitcoin as an asset class. So we're kind of started to broaden the scopes from just payments.
If you believe the case that Bitcoin is money is the largest market on the planet, you're attacking the biggest market there is in existence. And two, the amount of venture money flowing into crypto means that Bitcoin deals are underpriced. There's a capital allocation issue that we could solve and make a really compelling business case out of.
In conclusion, what Israel and I are discovering is that we're witnessing a paradigm shift in venture capital. What these conversations are showing and revealing is a sophisticated understanding that Bitcoin is not just an asset, but a fundamental technology platform that will reshape how business and finance operates. The investors that we've identified today and taking clips from emphasize the patience, the technical depth, and the alignment with Bitcoin's core principles, while positioning for what they see in an inevitable mainstream adoption.
I realized that one day I woke up and I realized how much of a hypocrite I was. And I was on these boards. I was actually on some environmental tech boards, all sorts of technology boards. And you knew, I talked about it all the time, that every single advantage you created there had to be consumed with more money printing to keep and to keep the inflationary kind of treadmill going. So you couldn't solve the problem from there. And so that was my impetus to want to move my time into spending my best time, my most valuable time, helping other entrepreneurs create value within the ecosystem that I wanted to see move forward.
Their big picture view centers on building the infrastructure for a new financial system rather than extracting short-term gains for speculation, representing what may be the most significant shift in venture capital philosophy since the advent of the internet. Lynn, this is an extremely exciting topic for the both of us.
Yes, and stay tuned for the second part of this series on what we've identified in investor trends, where we'll get into a little bit more of the tactical shifts in investment that we're seeing in the specific categories that are attractive to our Bitcoin investors.
We hope you enjoyed the conversations with these spectacular guests. And as a reminder, this podcast is for educational purposes only. If you enjoy the content, please remember to also subscribe, share, leave us a comment. Our DMs are open. We welcome the feedback.